Honorable Speaker, public enterprises are created with specific mandates and charged with responsibility of executing specific development projects for which government intervenes to secure development financing. They are expected to generate adequate income to sustain their operations, meet the cost of servicing development finance loans, and eventually pay dividends to the government. However, this is not the case for most of our public enterprises today. Instead, some of them are becoming a drain on government, a situation which is not sustainable. It is even worrisome when public enterprises continue to accumulate areas on personal income tax, PAYE, corporate tax, social security contributions for staff, and sales tax. It is the responsibility of the management of public enterprises to ensure that these monies that are deducted from source are remitted accordingly and on time. I therefore seize this opportunity to call on the management of the various public enterprises to assume their responsibilities fully. The government has made it clear of its intention of introducing public-private partnership arrangements to bridge the gap between public and private sector and facilitate the realization of the page. A public-private partnership framework is being established, and this will help and go a long way in addressing some of the ailing state of our public enterprises. Honorable Speaker, having reviewed the developments in the domestic economy, let me now present the fiscal outlook for 2013. On the revenue side, the 2013 budget is prepared on the basis of various macroeconomic assumptions, of which real GDP of 10.7%, inflation at 6%, below 6%, while overall budget deficit and current account balance excluding budget support are projected at 2.1% of GDP and 15.6% of GDP respectively. The exchange rate is estimated to slightly appreciate against major international trading currencies during the fiscal year 2013. Gross international reserves are projected at 192.8 million, representing 5 months of imports cover. Total revenue and grants for 2013 is therefore projected at $7.608 billion, or 22% of GDP, against a total of $5.771 billion, or 19.6% of GDP in 2012. Tax revenue is estimated to register $4.787 billion, or 14.2% of GDP in 2013, compared to $4.042 billion, or 13.7% in 2012. Grants are projected at $2.222 billion, or 6.6% of GDP in 2013, against $1.157 billion in 2012, or 3.9% of GDP. Similarly, non-tax revenue is forecast to grow from $598.7 million in 2013 from a base of $571 million in 2012. On the side of expenditure and net lending is estimated at $8.301 billion, or 24.7% of GDP for 2013, compared to an estimated figure of $6.722 billion in 2012. That is 22.8% of GDP. Current expenditure, which is made up of personnel emoluments, interest payments, and other charges, for 2013 is estimated at $5.204 billion, and is projected to be 5.23 as at end 2012. Capital expenditure and net lending is estimated to increase to $2.781 billion in 2013, up from an estimate of $1.492 for the current year. The fiscal deficit for 2013 is estimated at $692.7 million, or 2.1% of GDP, compared to an estimate of $951 million, or 3.2% of GDP in 2012. This fiscal deficit will be funded through domestic and external borrowing. The reduction of the fiscal deficit over the years is a sign of government's commitment to reducing and containing net domestic borrowing and eventually reducing the high interest rates. The public debt to GDP ratio is estimated to decline from 32.8% in 2012 to 29.8% during 2013. This decline is expected to further strengthen government's efforts in reducing the stock of public debt to a sustainable level in the medium to long term. Now, revenue and policy measures. Starting with the reform of the personal income tax. Honorable Speaker, following an assessment of the implications of alternative personal income tax structures on tax revenue and the distribution of the tax burden to the Gambian taxpayers, the Tax on Personal Income, or PAYE, which is also the first schedule of the Income and Value Added Tax Act 2012, will be revised as follows. The tax-free threshold will be raised from $7,500 to $18,000, representing an increase of about 140%. It will be recalled that the existing threshold was adopted in 1991. Thus, the proposed increase is justifiable based on the increase in the prices of essential goods and services over the years. The maximum PAYE rate will be reduced from 35% to 30%, and the new income tax rates will now be 0, 5, 10, 15, 20, and 30%, while the current income tax brackets consisting of 6 slabs and an income range of 10,000 will be maintained. With this reform, Honorable Speaker, all taxpayers will experience a reduction in tax burden and an increase in take-home pay with effect from January 2013. A taxpayer, for example, a taxpayer with an annual taxable earnings of $20,000 who currently pays PAYE of $1,375 per year will now pay only $100 per year. This represents a decline in tax burden of 93% and an increase in disposable income of $1,275. Similarly, a taxpayer with a taxable annual earnings of $47,500 who currently pays PAYE of $7,000 a year will now pay only $2,925. This represents a 58% decline in tax burden and an increase in disposable income of $4,075. From the assessments done, the revenue loss from this measure will be minimal, as PAYE constitute a very small portion of overall personal income tax revenue. Simplification of the tax procedures for small taxpayers. Honorable Speaker, in line with international best practice, the Gambia Revenue Authority will introduce a simplified presumptive tax regime for the small and micro taxpayers in 2013. This new reform measure will reduce the compliance burden of small taxpayers by getting them to keep simplified records of their daily sales. Small taxpayers shall be required to charge a tax rate of 3% on their total monthly turnover to be paid quarterly. The tax is a final tax, meaning that no deduction shall be allowed for business expenses. It is expected that the lower tax rate and the simplification of the processes and procedures will significantly reduce the cost of compliance, thus increasing the compliance levels of these taxpayers. The presumptive tax regime will be applied on taxpayers with an annual turnover of less than $500,000. Revenue neutral tax measures. Honorable Speaker, with the introduction of the value-added tax to replace sales tax in January 2013, there is need to realign certain tax items which will not increase the cost of those goods, including but not limited to the following. Rice, which currently is duty-free and attracts a sales tax of 5%, will be zero rated under the VAT regime